So remember, Kenvue was spun out of Johnson & Johnson, and that was actually one of the rationales for Kimberly-Clark making this acquisition, is that Kenvue is not operating efficiently, right? They were spun off from Johnson & Johnson, and so the business hasn't really been formed in a way that optimizes its operations. And Kimberly-Clark, meanwhile, is a much larger company with better operations, and it thinks that it can make significant improvements to Kenvue's business, and it found that there are synergies available. For instance, Kenvue has better operations in India, whereas Kimberly-Clark has better operations in China and Indonesia, and they feel that merging the companies together will bring forth a better overall company, a better overall business. And I tend to agree with these acquisitions, especially with these kinds of companies. You benefit from those economies in scale, and you also benefit from the reduction of some redundancies, right? If Kenvue has a whole financial department with accountants and CPAs, etc., and Kimberly-Clark also has the whole financial department with CPAs, accountants, etc. And right now, Kenvue is trading at $17 per share. So they're paying about a 20% premium to acquire Kenvue stock, which I believe is undervalued at the current market prices. Whether we look at the market multiple or the intrinsic value per share, I calculated at $24 for Kenvue. Now, if you own Kenvue stock right now, you're getting a few dollars in cash. I believe it was $3.50 in cash. And then the bulk of the value you're getting is in Kimberly-Clark stock. So it's important to understand the valuation for Kimberly-Clark because you'll be getting a lot of their share price. And I updated my calculation for the intrinsic value for Kimberly-Clark. And I also believe Kimberly-Clark is undervalued. This is a stock I've been recommending as an undervalued dividend stock because of the significant undervaluation. The market price is 106. The intrinsic value is 194. And this is after I adjusted the company's beta higher. I think you're well positioned here owning the stock. And even if the deal falls through and you end up being stuck with Kenvue stock, I think it's undervalued at $17. So it's okay to own those shares. And then if the acquisition goes through and you get shares of Kimberly-Clark, that's also a stock that I think is undervalued. So either way, I think you're in a good position here with Kenvue stock. Click the link below to watch the full video.